Welcome to the Q3 2025 earnings call for Dolla Financial Services Limited. I am Renee McDonald, Investor Relations Lead at Learn Grow Invest, and your moderator for this call. Thank you for being here with us today as the Dolla team guides you through their Q3 performance and the outlook for the company based on the current environment. As always, you are invited to place your questions and comments for the team in the chat. They will be addressed during the Q&A segment at the end of their presentation. Please join me in welcoming Dolla CEO Kenroy Carr to the platform as he leads us on this call. Welcome, Kenroy.
Hi, Renee. Good morning to you. Good morning to your viewers and everyone who have taken the time to join us this morning. It's always a pleasure to be on your the Learn Grow Invest platform. As I've always said, whether we have good news, bad news in between, hopefully always good, but it's always a pleasure to be here sharing with our shareholders and investors in Dolla Financial.
So I will hand over to you right after we have our quick word of prayer. Yes?
Certainly.
All right, let us pray. Heavenly Father, we thank you for this day. We thank you for this opportunity to meet together in this way. Lord, we know that there is so much happening in so many different aspects of our lives and of the country that we are based in. But we thank you, Lord, that we are able to be here today and be able to conduct this business. So we put this meeting in your hands, this call in your hands, and we pray that all that is done and said here is ultimately to your glory and for the furtherance of your kingdom. In Jesus' name I pray. Amen.
Amen.
All right, so over to you, Ken.
All right, thanks again, Renee. So good morning and thank you to everyone for joining us for our Q3 earnings call. I'm Kenroy Carr, CEO for Dolla Financial Services, and today I'm really pleased to share an update on the company. The Q3 or the 9 months up to September 30th, 2025, talk a little bit about those results and the strategic progress that we made during the third quarter, as well as the plans that we have for the remainder of the year. As customary, I'm also joined by Trevin McKenzie, our CFO, who will give you some insight into the numbers and what's really driving the results for Q3 and so far for 2025. And we also have with us David Henriquez, CEO of Ultra, who will also give you an update on that business segment. Before I begin, though, I just want to acknowledge the significance of the significant impact of the hurricane, which has caused widespread damage across most of Western Jamaica. And just to note that our thoughts are with you, our thoughts are with everyone affected, including our clients, our employees, and just the wider community as we all now focus on recovery. I know too that a lot of persons on this call will have a lot of questions as it relates to our outlook and just how the kind of impact that this will have on the company. But I'm first going to go through the Q3 results, and then after the presentation of the CEO of Ultra and our CFO, then I will give an overview of that on the business, and of course take any further questions that you may have related to the hurricane. So for Q3, and this is up to September 2025, we ended Q3 with a very strong loan book of about 4.6 billion. This really has reflected solely organic growth, as we have been seeing the results of some of the partnership that we undertook during Q2 and Q3 and an uptick in our disbursement. Truth is that we have seen quite a momentum when it comes to sales disbursement since we started this year, and we haven't seen where that has leveled off any at all. So the growth, which represents maybe about 31% increase year over year, is really a reflection of organic growth, and as we push to maintain the momentum in terms of disbursement throughout the period. Our revenues for the 9-month period ended at $1.5 billion, which represents a really solid 36% increase year over year. And I must also note that this sum is equivalent, or it equals to the revenue that we generated for the entire of 2024. So that 1.5 billion, we can certainly expect that at the end of this year, we'll be seeing a solid growth in our revenue year over year. We're also proud to report that our profit before tax has returned to growth. It's totaled $442 million for the 9 months. I mean, despite a lot of challenges that we faced in Q1 and Q2, where we had to make some additional provisioning and some bad debt write-off. But even in spite of that, the company grew, our profit before tax grew by 20% when compared to the same period last year. And this too, at 442 million, is very, very shy of the profit before tax that we recorded for the entire year, 2024 financial year. And we would also have delivered now 5 consecutive quarters of profit before tax growth. Growth in our profit before tax has been increasing over the last 5 quarters. And the Q3 result of $185 million actually represents a record quarter for the business. So that's the quarter that we have earned the most profit since inception. Our year-over-year increase in profit before tax was mainly driven by, I said it before, the great momentum when it comes to sales and just how much we have been able to protect the portfolio in looking at the quality and ensuring that we have a solid loan portfolio, as well as just focusing a lot on our expenses. We run a very lean operation. And the truth is, any increases that we see in expenses, we would have addressed those from Q1 and Q2, but all of the expenses we continue to just monitor and ensuring that we keep those as lean as possible. Our NPL, well, the credit quality in general has been relatively stable. Our NPL is at 12.5% as at September, which is slightly above our own target of 10%. But again, it's not a figure that is deeply concerning for management, and that is because we know that there are some significant accounts for which we are now working on the liquidation of the assets. And while these assets will take some time to be liquidated, the accounts are still running further and further into additional days of arrears. So we have assets that we're selling now that represents loans that are over the 90-day mark. And as soon as we are able to successfully complete some of those sales, then we will see the number ticking downward. I believe we would have completed maybe 1 or 2 during the quarter, which is what moved the NPL from about 13.5 as at June to now being 12.5%. So there would have been just a slight downward movement in the NPL, as well as the ECL remains really impressive at 3.3%. And again, this I don't feel like there is another loan company in the nature of business that we do that can have this level of ECL, and it's really because of the secured loan strategy that we continue to employ, which has really protected the company, especially in these times. All right, so this is a pie chart which just gives you a visual of how the loan portfolio is made up and our exposure to various our exposure to business versus consumer loans. So as you know, Dolla has really been, our focus continues to be on small, medium, micro, small, and medium-sized enterprises. Based on this chart, you can see here that the portfolio is composed of 93% business loans, while we have approximately 7% of loans that we disburse to for personal use. So again, we kind of try to keep the business model in a way where the money that we disburse, this is money that will work back to pay the loan, and that's why we have continued to really focus on the businesses. And in addition to that, we have also maintained that secured loan strategy. So we are seeing where the loan portfolio is composed of 85%. 85% of the loans that are on our book are adequately secured by real estate, motor vehicles, as well as shares, bonds, and stocks in some cases. All right, and then when it comes to the portfolio diversification, another visual which really, in summary, it's showing that the two dominant industry for us would be transportation, and then we have real estate and construction. Those remain our top sector, and this is something that we just continue to monitor closely to ensure that we manage concentration risk. We look at construction. There might be some opportunities right now. However, we will just assess what we have and see if we need to make changes to the model to ensure that even when we do make increase in certain areas, that it works out positively for the business, and ensure that we continue to maintain a well-diversified portfolio. All right, and I guess during the third quarter, Dolla and its subsidiary, we always want to show and reinforce our commitment to community, to development of empowerment and development of youth, and that's something that we continue to do. I know we sponsored we sponsored a contestant in the Mr. and Mrs. Junction pageant award, and I believe that was one that we followed closely, and the person that we sponsored actually won that competition. During the quarter, we would have also conducted some bi-weekly random draws just as reward to our lucky customers for vouchers of $15,000 and $25,000 respectively, as just part of the One and Ready campaign, and just a way to give back to some of our clients as they have been supporting us for months and years. All right, so I know many of you will have questions, as I said earlier, about the hurricane and just its impact on the business. However, I'm just going to pause here for a moment to allow David to give his update on Ultra for Q3, and then when we get to the outlook, I'll definitely pick up at the conversation as it relates to Hurricane Melissa and the impact on the business.
Thanks, Kenroy. Morning, everyone. Thanks again to the Learn, Grow, Invest team for having us, and thank you all for taking the time to log on to listen to the update on the Dolla and Ultra businesses. So just to get into it, our loan book sits at 1.6 billion as at the end of September 2025. Of course, ideally, we would have loved to be very close to the $2 billion mark by now, but it has been a fairly challenging year, but we are making all the necessary efforts to get where we need to be. Some may wonder, why is the loan book still at 1.6 billion? This just simply means that we are lending and collecting at a very similar rate, which is actually quite a positive thing, that we're able to keep collecting at a steady pace. The collateral held is just about 3.6 billion. As you know, Ultra's loan book is 99% secured, and we continue to maintain our loan to value ratio at somewhere in the range of 40 to 50%. So we are adequately collateralized for the loans that we have. So as we look into the year, the final quarter to come and 2026, we continue to always aim to strengthen our adjudication and our securities processes and our policies. It's no secret that we've had some challenges this year, but we continue to make every effort to adapt to our environment and continue to strengthen everything to ensure the best situation for our business and our shareholders. The damage from Hurricane Melissa is no secret, and prioritizing how we can help our customers who have been affected is our utmost focus at this point. We've been able to reach out to all our customers, which is, an absolute blessing. And none of the collateral held by our customers or held by us have been damaged. Yes, our customers have gone through personal damage, and we're going to do everything we can to help them. But we also still have to focus on the business, and luckily, God bless that we've had no damage to the collateral, and at least that's one thing that our customers can breathe easy about. But we will help them get back on their feet, and we are in the process of tailoring our loan product for them, each and every one of them, as they need it, so that they can continue being able to maintain their Ultra facilities and our business doesn't suffer. For the end of the year, we're looking to get our loan book to at least 1.7, 1.8 billion, and continuing to reduce our NPL. As Kenroy mentioned, our NPL can fluctuate, but it's not something that we are overly concerned about, as we are collateralized. So yes, we have properties listed on the market, and we have sold a few, and we are in the process of selling a couple more. So, yes, our NPL will rise at times, but we are in the process of selling properties and liquidating other assets. So we are not worried about that. We always aim to improve the quality and the diversity of our collateral held. And I think, just as Hurricane Melissa has come and gone, and the damage that it has caused, and the fact that we are in the position where none of the collateral that we hold right now has been impaired, basically, shows the strength of our collateral and the diversity of it as well. So we always aim to continue to improve our processes and grow our loan book. Our processes are very important because this is what makes the entire experience for our customer greater. And we always want to ensure that our customers have the best experience when dealing with Ultra and Dolla. So we will focus on our customers always. And we can't focus on our customers and not focus on our team, because our team is what makes it possible. So we continue to build our team, not necessarily in numbers, but in the dynamics and the diversity of our team and what they're capable of doing. So we do have a pretty small team, and we continue to maintain that, but we always have an all hands on deck approach, and we are here for our customers. So, I'll hear back from you guys in the question and answer section, and I will now hand over to our CFO, Trevine McKenzie, who will run through the numbers.
Thanks, David, and good morning, everyone. As usual, it's a pleasure to be here on this platform to just discuss with our investors and potential investors and just the wider public, what has been going on with the company over the past quarter. Now, Kenroy did a great job of basically giving you the gist of what happened with Dolla over Q3. We're happy to report that we have made some positive strides in terms of returning to growth when we look at our quarter-on-quarter and year-on-year numbers. Income increased by 36%. Our loan portfolio increased by 31%. We're now looking at $4.6 billion. And most notable was the increase in profit before tax up to $442 million. And that represents a 20% year-over-year growth for the company, and we're quite proud of that. And this is has even exceeded what we were doing last year in terms of our full year profit. So we're really excited about Q3 and what we have in store for the rest of the year. Now, in terms of the financial highlights, I did discuss. Now we're at $442 million in terms of year-to-date profits. This is a great accomplishment, and we have also seen, stable expected credit losses at 3.3%. We're looking at our non-performing loans. It's a little bit more than we had hoped. As usual, we would want to see our NPL at sub 10, but it's at 12.5. And given the economic climate, we're not surprised at this 12.5, but management, of course, is working to get this down to sub 10. And of course, we have a positive improvement in our efficiency ratio, returning down to 52%. Our hope here is to have our efficiency ratio return to sub 50%. We're working on this, and we're confident that we can have that happen hopefully by the end of the year. If not, we're looking at Q1 2026. Now, if we take a deep dive into the balance sheet, firstly, of course, we are looking at our cash numbers at $16 million, much less than what we had hoped to have landed at as at the end of the quarter. But as at the end of September, we had quite a bit of obligations to fulfill, and we're quite happy that the company generated enough cash organically to be able to fulfill those obligations. Going into Q4, we are hoping to build back our cash balances to ensure that we are at, about 100 million or 150 million come the end of each quarter, just so we can feel confident in our cash balance as at the end of these periods. Looking at our loan book, which stood at $4.6 billion, this represents a 45% increase year over year, and we're quite happy that we could have grown the loan portfolio organically this year. We have seen tremendous strides in terms of the consistency in our sales team. How they have been doing this year is tremendous, and that has really transcended from the loan portfolio into the income statement, and we'll take a look at that shortly. We have increases in loans payable due to the bond that we would have acquired late last year. So we moved from $2.3 billion up to $3.2 billion, which is a 35% increase. We saw increases as well in our payables and accruals due to the growing business. We're seeing where expenses and accruals have also grown. And also when we take on partnerships, etc., we're seeing where we will have those funds to pay over that sits in payables as at the end of the quarter as well. And through this growth, we're seeing where, equity would have grown as well by 38% up to $1.5 billion. And we have seen a similar growth in retained earnings, moving from $594 million up to $983 million. And this is a 66% growth year over year. We're also seeing this growth due to the slowdown in our dividend payments this year. And this is a strategy of management to increase or to build the capital appreciation so that we can return to more consistent dividend payments in the near future. Now, looking at total income, as I did mention, our sales team has been doing a tremendous job in terms of consistent sales this year. And this has really transcended into the total income that we're seeing for the 9-month period, up to $1.5 billion. And we find that this is a real healthy growth year over year at 36%. So we're really excited that our sales team has been putting in the work, and we're seeing where this has really done a good job in terms of increasing our total income year over year. Outside of that, though, we have our total expenses, which has increased by 46%, up from $531 million to $777 million. And we have been discussing over the past 3 earnings calls the reason behind this. We did face some challenges throughout this year that were unforeseen, and we believe that these are one-off expenses that would have increased our operating expense. And we have seen where coming out of Q1 and Q2, in Q3, these have normalized, and management has done what it can to ensure that all other expenses outside of those challenges that we faced have remained constant in order to just manage the increases in expenses this year. And we also operate a lean operation, as Kenra would have mentioned, and this would have really helped us to, balance the act between the challenges that we face and all the other expenses to ensure that we have as minimal impact on profits as possible. And we're seeing that where that strategy has been helpful, because we were able to grow our profit before tax from $369 million in 2024, September 2024, up to $444 million in September of 2025, which is a healthy 20% increase. Outside of that, we would have seen, of course, where profit before tax would have increased. We're seeing positive movements as well in our EPS, moving from 2 cents per share to 7 cents per share. So we really saw real positive movements in income and in profits, and we're hoping that going into Q4, we can continue to see those kinds of movements to close out the year in a positive way. And of course, we did discuss tax earlier, not tax, cash, sorry, earlier. We saw a significant decrease in our cash balances as at the end of the quarter. And we understand the reasoning why we have been utilizing cash. It has been an organic operation since January, but we're confident that we can return to much higher cash balances as at the end of the year going into Q1 of 2026. And at this time, I would like to hand it back to our Group CEO, Kenroy Carr, to just take us through the outlook and, of course, answer your many questions regarding the hurricane and any other queries that you might have.
All right, thank you very much, Traveen. I think that was quite deep in terms of the financial statements, but I know that you'll be there to answer any further questions in the next segment. So obviously, I know a lot of persons will be asking, how has the hurricane affected us? And just to give you a brief overview, Dolla Financial started in Western Jamaica. We have quite a few of our team members, maybe about 50% of our team reside in the parishes that were impacted by the hurricane. We have 7 of our 11 branches would have also been in those parishes. To date, we have reopened 3 branches, being Mandeville, Junction, and Fairview. And we're also working on the other branches, that being Discover Bay, Falmouth, Savannah, Lucy. Those are the 4 branches that are currently closed, and it's really based on the utilities being out, as well as the availability of team members in one or two locations. I believe the Discovery Bay branch would be the next on our list to be reopened based on the activities that we have or the information that we have so far. But we're working as best as possible to get the network back up where we can be on the ground serving our customers. In some areas, and our bill payment, that's Bill Express, would be back up and running, and we're seeing where a few customers are in fact making payments, albeit maybe not in line with what their contract requires, but you can definitely see where some payments are starting to trickling from some of those areas that have been heavily devastated by Hurricane Melissa. So some of our team members have lost homes, have lost roofs. I mean, the reports are no different for them than for our customers and many other persons that many other individuals that we have been seeing over the last 2 weeks. In terms of our loan portfolio exposure to that section of the island would have been a little bit under 40%, I believe about 39% of our loan portfolio. But Dolla would have moved immediately to just do an impact assessment on the portfolio to see what our exposure would be like. And if you have not, we actually posted an update on the Jamaica Stock Exchange for our shareholders, where we indicated that our exposure is equal to about 4% of the portfolio, which is relatively modest. But at the same time, I believe it also shows the strength of the loan portfolio for Dolla, whereas the 4% of the total portfolio that would be exposed, a significant chunk of that would have been unsecured loans. And obviously, we have a high ratio of secured loans, which means that in the event of loss, in the event of default, we still have something to recover. We have so many taxis in the area, or motor vehicles, which are comprehensively insured, and I've heard of reports of damages to 1 or 2 of those vehicles. But again, those vehicles are comprehensively insured, and in the event of a payout, Dolla will get the payment from the insurance company, and the decision will then be taken whether, if it's a total loss, to close out the facility and help the customer with a new loan, or if it's a repair, then we work with the customer to have those things in place. So that strategy that we've employed over the last several years of securing the portfolio, and that's a real way that we have protected your interest, our investors' interest at this point in time, especially in a time when we have 40% of our customers being in a position where they will not likely be able to pay the way that they usually pay. So I do anticipate, or we do anticipate, that there will be some short-term impact on the portfolio. Obviously, we will see a little dip in our we're certainly anticipating a dip in our collections over the next three to 4 months, and this is because we will be offering and seeing how best we can help our customers as they navigate these challenging times. So we'll be offering our customers moratorium. We'll be offering some of our customers moratorium, while others will just look at their loan portfolio and whether we need to refinance the lower monthly payment or lower weekly payment, so that they can be in a position to also pay a little, but at the same time focus on recovery. And then hopefully for those who have not experienced severe damage, then we can continue to collect on those accounts as per the loan schedule. In terms of the outlook and what intends to be our focus, especially in the short to medium term, in light of the hurricane, we'll be focusing a lot on just the continued stabilization of the loan portfolio and recovery support. So we're prioritizing our team first and foremost, because we need our team to be in a position to be back at work. So we're prioritizing relief, structured relief for our team. We're also prioritizing structured relief, as I mentioned before, for our customers through our customer assistance program, and also just looking at evaluating all of our collateral to ensure that everything has been accounted for. We have been working with our insurance partners, just going through our portfolio to ensure that our collateral, they are protected, and in the cases where there have been damage, at least we can still get the proceeds from the insurance company based on the fact that our mortgages are registered on these policies. We'll be focused on just helping our customers to rebuild. So just we're going to be looking at a pool of funds that we'll channel into especially our micro and small business customers, just to help them with their reconstruction, whether retail restocking, and see how best they can get their business back to a point where they'll be earning and helping the community as we try to help them recover. We will also be looking at our policies, obviously, in light of the impact that this can have on not just the economy in those areas, but the general economy in Jamaica. We'll have to be looking at our policies, looking at our methods of adjudication, and ensure that these are as robust as possible to result in us disbursing the best quality loans possible. So we'll be just optimizing cost as well, and ensuring that in this time we are even leaner than we currently have been. I don't know, that's going to be a very difficult job at Traveen, but we'll really be focusing on cost optimization and efficiency going forward. And of course, we continue to show up for our community. We had an event, we went down to a community bastard cedar walk on Sunday, the Ultra team, the Dolla team, our brand ambassador, and we just spent some time, shared some warm meals. It was just really good to be in the community, giving back, lending a helping hand. It was really special, and we will continue to focus on helping those communities recover in whatever way we can, and also implore other entities to do the same at this time. So in closing, I'd say that we had a solid performance in Q3, despite some challenges that we had in the earlier part of the year. I'm really happy that we have returned some solid growth for Q3, and I still remain optimistic about the last quarter. The profit may not be as robust in Q4 as Q3. However, there will be some impact, I'm sure, over the next 2 to 3 months, especially because of the lower collections that we are anticipating. However, I do still believe that year over year it will still be a good year for 2025, and based on the quality of our loan portfolio, we should be seeing continued growth for 2025. The hurricane has devastated a lot, but I do believe that in everything we can still leverage whatever opportunity. I think Dolla is one of those companies where we remain optimistic about the future in spite of all that has happened, because we have seen where there are a lot of opportunities that we can leverage to continue to build and grow the business. And that's it from me. I'll pause here for the next segment of the program. Renee?
Thank you so much for that, Kenroy, and congratulations to you and the full Dolla team, Ultra team, for continuing to grow and continuing to do well. And of course, we also thank you for the efforts that you all have put into helping the community so far to rebuild, and the thought that you have put into the products and the changes that you'll be making to support the rebuilding efforts. So at this time, I'd like to welcome David and Trevine back to the platform for the Q&A segment. So we do have a few questions that were already put in the chat, and we're going to start going through those, while also saying if there are any additional as we can. So let's get started. I think some of them you would have addressed, Kenroy, as you spoke about the hurricane and the impact it has had. So the first one does ask about that. So we're just going to go right into the second question, which partially was addressed as well. What percentage, this is from Terence, what percentage of new business is generated in the affected areas, and how will the company continue to grow considering the potential loss of this business?
All right, so I'll take that one, Terence. So I believe I mentioned a figure earlier of 39, we can just round it at 40% of new business. The good thing for us with business in the areas of, South, Black River, those cities in the affected parishes, is that we typically disburse a lot of motor vehicle related loans, and these loans are used for income generation, so taxi drivers, juta and tourism. So we find that already a lot of the taxi drivers, while business has not returned to normal, they are already on the road running their taxis. So their business has, in a sense, started to recover. So as I said, we do anticipate that there will be some short-term pain because there will be a slowdown in collections, and we do rely a lot on collections to meet all the obligation and to disburse new loans. So we do anticipate that there will be a little bit of slowdown in collections, as well as maybe our ability to fund loans at the level that we were doing over the last several months. But in general, the other areas of the island, which has been largely unimpacted, we continue to do disbursements at this point in time to those segments. And we also have customers, we also have been seeing a lot of queries about new loans, even in the impacted area. There are some customers who have paid down their loans significantly and are really good paying customers, and we're prioritizing disbursements to those customers. So in terms of the growth itself, we will see a little bit of slow for the next 3 to 4 months, but we are very optimistic that we will return to normal growth in very shortly thereafter.
All right, thank you so much for that. And I take it then that 40% is current, but also represents your typical balance in terms of new business as well? Because Terrence, I think, was specifically asking about new clients, right?
Yes, that would probably be in line, a similar disbursement sum to those areas on a typical month.
Okay, understood. Thank you. So Michael was asking, how will Melissa affect the repayment of those loans in affected areas? What plans are in place to migrate or reduce exposure to the dollar loan book?
All right, and I believe that I've touched on this one as well, Michael. So in terms of the repayments, I believe at this point in time, and it's not just dollar, but a lot of this is where the compassion comes in. Obviously, some customers will not be able to repay for a few weeks or for a few months because either they don't have any work or they have to just be focusing on putting back a roof over their head. So we understand and really have to work with the customers in those cases, and that is why we have designed a customer assistance program where once the customer, we're open for customers to pretty much apply for a moratorium, whether it's 3 months. We'll assess the individual to see if after 3 months we'll still need to extend further moratorium, or whether the client can get a refinance whereby this will maybe extend the life of their loan, thus reducing their monthly payment, their monthly or weekly payment, and to put them in a better position to be able to still make a little payment while focusing on their recovery. In terms of the loan book itself and the exposure, I would have mentioned that we have already completed an analysis of that, and because 90% of the loans in the affected area are secured loans, you do find that the exposure are mostly related to some personal unsecured loans. So we have already done our assessment, and that is what our exposure would look like. And of course, we continue to just explore opportunities in the areas that have not been impacted to ensure that we can continue to disburse prudently and continue to grow the business.
That would have been a comprehensive answer that you got what you needed from that. The next question is, what is the value of the assets being listed for sale? I believe, David, you had mentioned that in your presentation.
So the value in total, well, after we've done our kind of checks and balances after the hurricane and spoken to our customers and met with each of them and their potential way out, the value of the assets listed for sale has changed. We obviously, our intent is never to liquidate the properties or assets of our customers. We always want to, be able to work with them so that we can close this loan. I mean, at the end of the day, we are in the loans business. We're not in the collateral selling business. So that's never our aim. But I would say right now we are probably a little over 200 million in potential sales. And obviously we're doing everything we can to liquidate these, but also still trying to work with the customer on the back end to see if, they can find a way to meet their obligations that we don't have to sell their assets.
Right. Thoughtful approach, of course. So thank you for that. And still with you, David, the question is, what is the size of the Ultra team now? You had mentioned a small team.
Yeah, so our Ultra team now is 5 members. That includes myself, our VP of Sales, Mario, who really, he is mainly based in Montego Bay, but really traverses the whole island. We call him the Island Ambassador. We have Daniel, who is our head of credit and adjudications, Nola, who is our head of collections, and Leanne, who handles basically a little bit of everything. She's our loan admin, but really a jack of all trades. So that is our full team complement right now.
Okay, thank you for sharing. Terrence asks, will you consider expanding selling agents for your bond? Specifically, will JMMB be onboarded as a selling agent? And I'll just tack on Jamara's question as well. Same question about the bond, but she's asking if NCB Capital Markets will be selling the bond.
Thanks for that, Terence and Jamara. So we have approached or agent or advisors, Mayberry, they have approached JMB to come on board as selling agents. But regarding NCB Capital Markets, not as yet.
All righty, thank you for that. Jamaro, I think, anticipated a part of your update.
Could you repeat that, Renee?
Oh, sorry. Jamar is asking, will there be any loan promotion being offered to people who suffered damage from the hurricane? And if yes, what measures will be put in place to ensure repayment will happen with the loan within the loan period? So you would have touched on this.
Okay.
And I think the latter part about the measures, if you want to reiterate that, you can feel free to go ahead.
Sure. So as I said, Jamar, there are, in this time, I believe that one of the greatest opportunities really to help, opportunity for the business is to set aside a pool of funds to help people rebuild. And obviously it's something that we have to approach with extreme prudence, given, I mean, just what we're facing. So, I mean, one of the greatest things that we have done over the last several months or several years is really to protect the portfolio with adequate collateral. And we will continue to, we will be offering promotions in those areas as Dolla help to rebuild Jamaica. And we will continue to we will continue to implement our secured loan strategy as a part of that drive when we do new loans in those areas, just to ensure that there's something, the loan portfolio is well protected. And at the same time, I spoke about just our refined credit models before, which really now would include or incorporate the realities of those parishes and Jamaica overall, to ensure that once we disburse, we are doing so prudently and we can recover at the end of the day. I know that recovery sometimes, if I go to Westmoreland now, I met a customer when I went to Westmoreland on Sunday, and this was a business customer. It wasn't a Dolla customer, but he approached me to say that he has a supermarket and wants some money to restock about $5 million. And the conversation was good in terms of the investigation and finding out what he does, what assets the company owns or what assets he owns. And at the end of the day, I think it's a loan that we will be writing. However, we are also cognizant that in this time, it might be one of the things that we can do is to just give him a moratorium once we disburse the loan. So give him a month or 2 months before he starts paying. It means that the business will collect no cash in the first month, but at the same time, I believe it puts him in a position that he's able to actually honor his obligation starting month 2. And that loan should be a good performing loan with a good collateral in place. That's just an example of loans that we're seeing from those areas, as well as our customers who have paid down their loan to some point that they've already contacted us. They want a top-up, they want a new loan. This loan would have already been a secured loan, so the security will still remain in place. And again, that's a way to protect our interest and ensure that we can recover at the end of the day.
Thank you for that. Again, a very thoughtful approach. We can certainly hear the heart of Dolla as you did. The next question is inorganic growth off the table with the current economic environment?
Well, for us, we would have issued a bond prospectus in October, maybe 2 weeks before the hurricane, right? Because this was very much not anticipated. So we do have a bond prospectus out there, and the proceeds from the bond, of course, would be pumped into the loan portfolio to grow the company and increase our revenues, etc. So not off the table, it's still ongoing. We would have hoped to close in November, but in light of the current circumstances, we have extended to the end of December. We're cognizant that many persons who would have wanted to invest may not be in a position to. However, we're still hoping that even though the economy will slow down just a tad bit, we're hoping that the unaffected investors, the banks, the pension funds, etc., would still be interested, especially given that we would have just closed out or repaid our Victoria Mutual Wealth Management bond that matured in October, successfully closed. And those investors were happy with how the company performed. So we're really hoping that that's positive and that will help us to continue to successfully close the fundraise by the end of the year.
Okay, fantastic. And that was one of the questions that I had about the fundraise and what's the expectation. So thank you for answering that in advance. The next question is from Earl, and he's asking if you expect the NPL to increase to at least 15% as the country tries to deal with the hurricane fallout and the government changes policy.
All right, so I'll take that one. Thanks, Earl. I don't know what formulas you use for that. but naturally, with a slowdown in payment, we do anticipate that there will be some small uptick as well in the NPL for sure. The good thing again is that similar to when David mentioned that the loans at Ultra, which are non-performing, or the loans at Dolla, which are non-performing, in a lot of cases we do have collateral on hand. So I do anticipate that we will be seeing some increase in the arrears for the company on a whole, especially over the short term. But again, the customer assistance program that we have put out, we should be seeing, hopefully, it's going to be a little difficult at first because a lot of the customers are still in the impacted area where they don't have any service. So we might put out something, we're not able to get through to them on the phone, or they might not see that they need to come in to sign something for the refinance or for the moratorium. So in light of that, we do expect, especially over the short term, that there will be a slight increase in the NPL.
And related question, do you perceive any drop in demand for loans from the parishes affected by Hurricane Melissa?
Well, there has been a drop so far, but I believe it's because of the lack of connectivity. Once people are able to connect, I think the first place that they'll call is Dolla.
I was going to ask if it's quite the opposite, because I think as persons are trying to rebuild, they will need, a lot of shops were lost, a lot of businesses were impacted, a lot of people need that help, that seed money to get started again. So I suspect that it will be quite the opposite, and there will be an uptick.
So once they get back service, where that is where the demand will actually rise in those areas. We do have a lot of business clients in those parishes. Every little man with upon the road a hustle, them have one little shop or sell some, them have them spirit license, sell some liquor, Dolla. I can guarantee you that most of them has a loan with Dolla. So those persons will actually need to rebuild.
Indeed.
Yes.
Indeed. Thank you. Terence is asking, what is the current status of Dolla Guyana? Should we expect any further write-downs or expenses from this subsidiary?
At this time, we have successfully written off Dolla Guyana in 2025. So we are not expecting any further write-downs where that's concerned. We're currently in the process of winding up the company with the regulators in Guyana. So that's where we're at. But at this time, we don't expect any further write-downs or expenses related to the subsidiary.
All right, fantastic. Thank you. This is the second to last question that is currently on deck. Our clients
It seems Renee might have cut out there. But the question, our client requests being redirected, so the branch is still open. Yes, the answer is yes. We do have client requests coming in, and we're trying to assist them where we can. So, for example, if our Falmouth branch is not open, we can anticipate too that those customers don't have self-service and they may not be reaching out. But in the event that they do, we redirect the requests where we can assist them.
Thank you, Shervin. And yes, we're having a little glitch over on this side. As you see, the camera is offside. I do apologize for that, and thank you for picking up.
No problem.
And the final question is from Earl. I think he was following up on something you mentioned earlier about the NPL. And he says, you mentioned you can liquidate NPL as an option, but how quickly can you do that to not affect operations? I believe David had touched on it in his discussion, and Kenra, you may have spoken on it as well. Is there anything else that you'd like to say to Earl about this?
Just to say, in term, I'm just reading back the question, but so the NPL is affected. It can fluctuate sometimes depending on the size of the loan that is now at a 90-day without payment. That is like if a customer misses 3 monthly payments. Liquidation is a strategy that we use to get back our money, obviously, and to get a loan out of 90 days or a loan out of a non-performing state. It's not our first option. It's not our very first option. So when we get to a state of liquidation, it means that we have done everything we can for this customer, whether we gave them a refinance, we did some amendment, or just put them into our customer assistance program where we can design something unique for that customer to just make it work. So when we get to the liquidation part of it, it is the very, very last resort, because we're really not in the business of selling. We're not a selling company. We're not in the business of selling assets per se. That's motor vehicle or real estate. But when we have to, we just have to. Now, when it comes to the motor vehicles, we typically have a very, very short turnaround time. So once we repossess, typically 2 to 3 weeks time, we're able to dispose of the collateral. And then the impact on the business is not as great because we do get that cash to repump in the business. The truth is that when the ones that are secured by real estate will take some additional work. And as you know, a typical real estate sale will take somewhere between 6 to 9 months to go through, especially if a mortgage is included. So the liquidation strategy works, but sometimes it really delays. It takes some time. So you might see a loan impacting NPL in Q1, and in Q4 it's still impacting NPL, because even though we started the sale in Q1, it wasn't successful until the end of the year. So that one takes some time, but at the end of the day, we're still accruing the interest for the business, and when we sell and close out, we're able to recover both the outstanding principal and interest from that loan.
All right, thank you so much. And with that, I think we have exhausted all the questions from the audience, and we have covered all the questions that I had outside of what was sent by the audience. So thank you once again to the Dolla team for an informative session. Thank you for being transparent and open and being present for your shareholders here. It is always appreciated, and we look forward to seeing you in Q4. Thank you as well to our audience for being here and participating in this discussion.
All right. Thanks, Renee. Thanks, everyone. Have a great day.